Welcome, everyone, to another RLT Pivot podcast. My name is Tracy. I'm one of your hosts today. I'm here with my co host, Dan Jansen. And before we get started, just a reminder that the chat is live. So if you have any questions or comments, please throw them in there and we'd be happy to get to them as soon as we can. And otherwise, you can throw them in the comments below. Don't forget to like, subscribe, and hit that notification bell so you can be notified of any future video content that we release. Before we get started as well, I want to make some announcements. Today's episode was supposed to be taxes and LLCs, and unfortunately, our guest was not able to make it today. That being said, I just want to encourage you all that if you are looking for information on taxes, please consult a professional. It's recommended that wherever you live, because the taxes are going to vary country by country and state by state and province by province. So consult a professional. The other thing is we do have a few videos that we have released on our channel. One of them that was most recently done with Robert Felco was the video with Raven Johnson. She is a tax professional. So feel free to find that video. It's got some great information. And we have another video on taxes that will be coming out in the next little bit. So pay attention for that. Remember, hit that notification bell so you can know when they get released. And there's tons of information in there. Hopefully, we will get around to recording this episode at some point in the future. Now, Dan, do we have any other announcements before we start?
Yeah, one, we're just delaying the tax episode like people like to delay paying their taxes. So I think we're just kind of keeping up with other common trends.
Great point.
But yet we do have the just another quick announcement. We do have the real life trading squares, like the Hollywood Squares themed game show that we have. That's coming out August 5th with pretty much most of the team from real life trading will be here on the podcast. We do have two contestants. Those are not decided yet because there's a contest for that. So we do have a landing page on the real life trading, reallifetrading.com website where you could go to the Pivot Podcast. You'll see the landing page. You'll see all the episodes. So if you guys missed anything, make sure you guys check that out. And then you'll see all the rules as to how to become a contestant on that show. So make sure you guys check that out. So we have that coming up. And then very important, we got that free week. So it's an open house that we're doing at Real Life Trading. So for all you guys that come in and watch our Pivot Podcast week after week or catch them on recordings and are not part of Real Life Trading, whether you've taken the free content or not, that's available to everybody. But we do trade live during the market. So if you guys want to check that out, learn a little bit more about what Real Life Trading is, be able to enrich yourselves, tell your friends, tell your neighbors. If you like your neighbors, if you don't like your neighbors, don't have to mention it. But that's a good place to go over and sign up for the free week. So that's going to come up July 19th to the 23rd, completely open house for the day trade rooms and swing trade rooms. So very cool on that front as well.
Where did they
and on this episode,
where do they find the link? Where do they find the link and register?
So this is going to be on the landing page for the Pivot Podcast on Real Life Trading. So go to reallifetrading.com, click on the Pivot Podcast page, and you will see
for the free week.
Oh, for the free week, go to reallifetrading.com as well. And then you'll see the free week tab listed there, link on there as well. So you can guys sign up, register. And again, check out Real Life Trading.
Perfect. What do we got on the go for today?
It's a topic nobody wants to think about, but you got to kind of prepare for. So what happens if the market crashes? What do you do, Tracy?
Oh my goodness. Well, first of all, I don't panic. That's number one. So
don't panic.
I don't panic. And not only that, what I have a tendency of doing is shutting down a lot of my social media because I really get irritated, I guess you could say, with all the sky is falling talk. It plays on the emotions. I don't want to get emotional, so I want to try and make sure that I limit my exposure to that kind of conversation. That's number one. So that's how I manage to keep the stress level down and stay focused. The other thing that's a big one is recognizing, like, I have rules in my swing trading plan as well that prohibit me from really leveraging to a point where I'm over leveraged, I should say. An example would be I can take as many swing trades as I want and use up my entire capital, but I only allow for a maximum of 7 Rs to be at risk at any time. So for instance, I get into the first 7 trades, I have 1 R at risk at each. that's fine. I can do that, but I'm not allowed to enter into any more trades until I've locked in either a lot of profit or I've locked in a stop loss that's protected me. That the chances if it gets rolled over or even a gap down, I won't I won't lose another R. So I keep that 7R at risk maximum at any given time, and that number fluctuates depending on the account size that I'm working with. So, how about you? What are some of the things that you might do?
So there's a few things that you could protect. It depends on what you're doing. If you're day trading, swing trading, you're playing options, you're in it for long term, whatever the case is, there's kind of like hidden good things about a market crash. Everybody's obviously panicking, but I mean the phrase is buy the dip, right? So if the market crashes, there's no better time to buy a dip. If you're in for the long term and you have some kind of steady budget every single month, you're just kind of buying good quality companies with dividends or whatever the case, a market crash is relatively good for you. Even though those positions might go down, you're now able to get the same positions at lower price, average your entire price down. As long as you got time on your side, there's some benefits to that actually happening because now you're in a different position to work on growing your account. It's like the movie Big Short, where the two guys from the hedge fund, they're like shorting the housing market and it starts crashing, and they just make tons of money and they start dancing in the casino. And Brad Pitt's like, "Don't dance. People just lost their jobs and homes and things like that." So yes, it's very sad, very bad for people that are in the market that don't know how to handle the risk. But at the same time, if you're steadily following your plan, which is absolutely key, it is a good thing if the market comes back, because now you have a different opportunity to get those good quality stocks that probably took a beating that wasn't really necessary for that to happen. If you're in positions, let's say you have the long term and you want to do some kind of protective puts or something like that, that could actually help bring in some kind of profit, protect some of the losses on the downside for when that does happen or occur, just to give you some kind of leverage and ability to hold it longer if you need to. So that's how I would play that one.
Okay, well, that's fair enough. Now, before we move, I guess, go further, I want to get some semantics out of the way because that's probably my biggest beef. What would you define as a crash versus just a dip?
Good question. With the market on a tear right now, I mean, a crash, people will freak out on a dip, but they won't be able to handle the crash. Most likely, most people over leverage. Everything's bullish. People are getting in since March. They've gotten into the market when the market was crashing. So I would say the market crash was COVID-19.
Okay.
That to me, that size drop would be a market crash. Housing crash in 2008. That was a crash. If it's dropping 2% and people are freaking out, you're probably just over leveraged, and that's more of a buy the dip type opportunity. If it falls 10%, it's not really a crash. It has to be a much bigger, deeper, wider crash with sustainable information or news as to why the crash is happening.
Yeah, exactly. And I would totally agree because I feel that a market crash is actually a correction in the market. So the market has gotten way outside the scope of what value would be, and it needs to correct itself. So that usually comes with excessive prices, right? When you get really high into the market, you're going to have a correction at some point. Otherwise, yeah, it's just the natural ebb and flows of the market. And no, today was not a crash. This was just a down day. My mentors, students, and I have been talking about the pullback that's been necessary in some of the Qs and the SPY, et cetera, particularly in the tech sector. We've been waiting for it. We've been watching for it and expecting it. So that's just, like I said, a normal opportunity or a normal ebb and flow in the market, and it does present itself for opportunities for buying. Have you actually gone through a market crash other than COVID?
I was in the market for the 2008 housing crash as well.
For the 2008. So
Yeah.
during
I wasn't there for the .com one, but I was there for the housing market.
So you actually were in the market before the market crashed and then lived through the market and had an account afterwards to continue trading. What were some of
the 2008 crash? That was probably my first experience into market crashing. That one helped me to deal with. It's like you have to live through something once to be able to deal with it again in the future and be able to prepare yourself.
Mm-hmm.
If you're in uncharted waters and never gone through anything before, it's very tough to navigate through that. So I was a little bit more prepared for the pullback for the COVID-19 crash, but both crashes were inherently very different. So the crash for COVID, that was a straight shot down. I mean, if you were buying puts, getting out of positions, whatever the case, it happened so quick, that pullback, and then the recovery not just as quick, but in compared to 2008, so much quicker. Where 2008 was a steady build, and again, it was more fundamentals that really hurt the market in 2008 as opposed to the COVID, where COVID, I mean, you have a disease that's out there, but that's not a financial fundamental problem with the economy. It can affect the economy, but it's a little different as that. But so just the recovery was a lot quicker. But what happened with 2008 definitely prepared me for the, what is it, a year ago crash.
Gotcha. Now, do you think that there's any kind of warning signs, or like you went through the 2008 crash, you've been through the COVID crash. You said that you were more prepared for the COVID crash, even though there was massive distinctions between the two, one of them being fundamental, which I completely agree. And the COVID was more of a news-driven hysteria of uncertainty. But you were more prepared for it. How? Why?
So with the market itself on the SPY, if you look at the daily chart on the SPY, without even it's weird because a lot of the technicals kind of get in line with a lot of the news events and things like that. So not saying one's pushing the other or whatever the case, but there was some serious divergence on the SPY during that time. And if you guys don't know what divergence is, when the RSI is not looking exactly like the actual chart. So that kind of prepared me. I wasn't expecting as big of a pullback that quick, but I was expecting something. So I was able to get a lot of puts in place, clear out a lot of the longs I had. Not for the long term, I just hold them and it is what it is. But that was the ability to kind of see that kind of happening where I thought we were going to get some kind of pullback. And then you start seeing the news come out as far as there's going to be some kind of virus coming in and possibly shutting down. And then I think it was when President Trump got on TV and said, we're in a disaster, whatever it is, we got to shut down. That's when the market really started tanking. So at that point, I was already good because I was getting in based more on fundamentals and technicals than as opposed to, kind of just chasing. But even after the announcement came out, the market itself, it did give you a little bit of time and hesitancy to start making your moves as opposed to just instantly just the market drop. So you got to be prepared for that. And you have to have some kind of, again, the 2020 crash, that was much different than the 2008 crash. The 2008 crash, actually, there was signs in the market as a whole prior to that move. And again, everybody that hears news or even the COVID news, they're not preparing themselves for that big massive drop. They're just assuming, okay, we're going to get some kind of pullback. But if you're preparing yourself for the pullback and then the market does crash, you're already on the right side and actually able to profit a little bit more from events like that.
That totally makes sense. Do you have any rules in place that if you weren't, let's say you missed the market crash and you weren't able to throw some puts in place, do you have any other rules in place that would kind of limit your risk?
Yeah, so it depends again on the plan of getting into it. So I have multiple accounts. So I have one for day trading, swing trading, pyramid building. I got the long-term account. Each account has its own functionality of what it's intended for.
Mm-hmm.
And each account has different rules in place for what it is. So the long term, if I did not have any puts in place, protective puts, so be it. I mean, the next month, my plan is just keep buying stocks with the same dollar amount. So again, it's not the worst thing if it goes back, unless I need the money within this year or 2 years or something like that, which I don't. So if you guys are starting your long-term portfolio, we just had the all-time highs of the market yesterday. You could buy anything you want today, and then next month you come in with the same budget, and whether it's higher or lower or whatever the case, you're just kind of averaging your price around. So you're kind of preparing yourself for that, again, unless you have been building out your portfolio and need that money for the next year or two where you don't have the ability to have time on your side.
Mhm.
But if I'm in a day trading account, that's fine. I mean, I can make money on the way down. We could just short things. We could buy some puts as the market's coming down, just following the pattern and trend. Otherwise, if I'm in like a swing trade or something like that, the most I'm going to risk is one unit, so one hour per trade. So if I have 6 trades open in a swing trade account and they all come back because of big market crash, all right, well, I lost 6 hours, but I wasn't sitting through in that specific account big major losses of me just like, oh, it's going to come back, and we all know the story. It never ever makes it back when you're expecting time until it becomes too deep of a loss. That's when you pull it, and then it comes back.
Yeah,
Typically.
exactly.
Yep.
The other thing, what are your thoughts on stops?
What are my thoughts on stops?
Yeah.
For
And the reason that I'm saying this is because I hear from a lot of students. I hear it in the Slack channel. I hear it all over the place. And then during these big pullbacks, or during a lot of pullbacks, um, a lot of people are struggling. They're struggling a ton. And I know that people pull their stops. They aren't using their stops, and that ability to actually pull the trigger and exit a trade when you said you're going to exit the trade, but then you don't, because your psychology starts to rationalize around, well, it'll pull back, I was up a week ago, I was up 2 weeks ago, I'll just give it another chance to go back up there, then I'll put my stop in, or then I'll sell. And it never happens, and then they get underwater further and further and further, and they can never recover, and it becomes such an emotional burden that some people contemplate quitting, some people get very depressed, et cetera, et cetera. So I'm talking about that.
Yep.
Stops.
I don't know if you could tell how just shocked I was you even asked. It's just part of trading. Like, be okay with the losses. You're not going to win every trade.
Yeah.
So again, if you're in a trade that you're taking and you're worried about it getting stopped out because you don't want to take that loss, review your plan, join a mentor group, do a one-on-one coaching, look at how much that R actually is to you in value to your account, value to what that actually means to you, like dollar wise. But have stops. I don't even take a trade unless I could put in targets and stops. Right?
There you go. Yeah.
Just
It makes
that's just the ordinary process. And I say that because I've been trading long enough, but I understand getting into a trade. I did it all the time when I was newer into the world of day trading, swing trading, investing, just buying random shares of things just because they have a cool mouse logo or something like that. So I understand, like, when you get into a trade, you're going to be right. That's the thought process anybody would have. Otherwise, why would anybody take a trade they think they're going to lose, right? So when I became a better trader, I flipped my mentality, expecting to lose a trade, thinking I could go higher, but assuming that that's going to be a loss. And if you do that and you have a different mentality and it stops you out, okay, well, you have your rules in place. You take a loss on that one, recoup, retrade, back trade a little bit, understand why you took the loss. And you could review the trade and be like, yeah, I would do the same thing again. Go back into the market, find the same setup, and do the same thing again. Like, if that's your plan and you back traded and back tested it, that one didn't work, but I'm not going to sit through a trade that I could potentially blow up an account on for no reason.
I love it. I'm actually going to take that a little bit further, because I believe I'm right on every single trade. So, and I'm right on every single trade. My analysis includes both directions. My analysis is saying that this is what I want to see if it goes long, or this is what I want to see if it's going in my direction, and this is what I want to see if it's going against me. So when I'm doing that analysis, I'm determining what my fail point is, I'm determining what my success point is, and I'm placing my trade accordingly. So my stop is not in some random location. My stop is very clearly where I want it to be, because I know at that point I'm wrong as far as the direction of my trade. But I've already made my analysis, so I'm right in the way that I've analyzed the trade. I'm right in the way that I've set it up. It's just, you don't have a crystal ball. I don't know 100% with 100% certainty whether a trade is going to succeed or whether it's going to fail, but I can do the best I can in my analysis, and through my analysis, I know what I want to see, plan for it, and in that very action, I am right no matter what happens.
That's deep, Tracy Ball. That's deep.
It is, but it gets you around that whole mission of going, I don't want to be wrong, right?
Yep.
It gets you past that. And I think that's where a lot of people will pull their stops and they just don't, their pride doesn't let them be wrong. And I'm trying to tell you, your pride doesn't need to be wrong in any way, shape, or form if you do your due diligence, right?
Yep.
So if stop placement is an issue for you, then, get on a call, give one of us a shout. We'll be happy to have a quick conversation with you and find out what the next steps would be, right? But that's definitely an issue. So yeah. Anyway,
Yep. You can't win if you keep taking losses.
no,
Like you could win if you're getting stopped out, but you cannot win if you're constantly just taking losses that are going to outpace your wins. Mathematically impossible.
absolutely.
I'd get my calculator ready, but
And you know what? It makes no sense to me to let something go down, 10, 15% and hold it and then wait for it to go 10, 15%. That means it's made a 30% move and you've made no money. I I just don't understand that. It makes no sense to me. So take the loss, get in at a lower price and ride that wave back up. And you know what? Even if you get out and it turns around on you right where you get out, you can get in and the chart looks better at that point. The chart is in a better condition. The chart looks better. You're getting in a trade that succeeds. It really doesn't matter whether you buy it at $20 or $2,000. The whole point is that you're doing well. How many people here have traded AMD? I trade it all the time. Right now, what is it, like $80, $90 in that range? I was trading it last year at 20, right? So I don't have a problem putting on a trade now. Chart looks a little bit different, right? But I'm not going to sit there and wait till it gets back to $20 to trade it.
You don't wait that long?
What's that?
You don't want to wait that long?
I don't. I mean, I'll load up if it ever gets down to 20 again, but hey, no, I have no desire to wait that long. The chart is the chart, and I'll trade it that way. So how tight are my stops? And percentage wise, my stops vary. So I look at support resistance levels. I put my stop with at least 2 support levels between them or 2 resistance levels if I'm going short. That's kind of my rule. So whether that's a swing trade or whether that is a day trade, that's pretty much what I look for. So I do not play tightly. I would rather play with a bigger R than with a tight stop and just give that opportunity for some of those support levels to work. And if they fail, I can react quickly because I hate losing an R. I really hate it. It plays on my mind. I know that about me. I don't like seeing a 1 R loss. I would much rather see a 0.5 R loss, even if it equates to the same dollar value. So it's just something that, yeah, that's me. I've learned how to deal with it, and that's been my solution for it.
Yeah, I don't have a certain percentage that I would use for a stop. Like it's not like I get in and if it moves 2%, because 2% on Tesla is very different than 2% on Halliburton.
Exactly.
Right. So it's very different as far as how the chart moves, how big a candle is. 2% on Tesla could be 1 or 2 candles, like crazy. So what I do is I'm looking for 2 things. I'm looking for the previous pivots, which is something that you're looking for, and I'm looking for volume. So if I see certain candles with volume, that to me tells me like more people are trapped, or if it starts breaking down again or whatever the case, I most likely then, all right, well, if I'm going bullish above a high volume candle, all of a sudden it comes back down and starts breaking below it, I'm wrong. I mean, that wasn't the right time. So I'll actually go a little tighter with stops for me personally, just because I'd like to be in and out a little sooner. But for me to get, like, I was always wide stop person for a long time, and then I started getting better at just understanding the candles a little bit, the sentiment, the volume, and just kind of understanding a little bit about the R and just knowing like pure math. If I take 2 trades and I'm taking tight setups, one I could get to run for 2 R's, the other one I lose an R. I was only 50% correct, and yeah, it sucked to lose that first trade for a full R, but on that second trade, I hit my 2 R. So out of being 50% correct, I'm still up an R for the day, right? And now you have that R to go back, and okay, if it doesn't work, now you're even. You took 3 trades, 2 of them just didn't pan out, and you're even for the day. I mean, you're not really losing anything. So I do play tighter stops on my trades, but I'm not basing it off of just random numbers. I'm not basing it off percentages. It's just for me more candle sentiment as to where could I think if it starts passing a certain point, then the trade's just over.
Yeah, and that's true. It's so true. I like I said, I have learned that I don't like losing 1R, so that's why I've done it. So instead of playing with a $500 R, I will play with a $1,000 R, but with a wider stop. And so money wise, like the actual dollars, I end up netting out the same, but my actual R for the year might be less than if I played with that tight stop. And there's been a lot of times where that if I had that tight stop, I would have got just
Yep.
wicked out and it didn't win. This has given me a much bigger success rate. So that's why I do that.
Yeah. Yeah.
But
100%.
it's a bigger thing for my psychology. That's really what it is. Because that
Yep.
1R, I tell you, I feel like I I feel like such a loser when I lose 1R, and I hate that. It feels like such a failure because I feel like my job is to lose less than 1R. So
That is that. Follow your plan, lose less than an R. It makes sense.
yeah.
I think that's a key point that I hear though a lot is what if I get wicked out?
Mhm.
So like it is so annoying to be the person on the wick. Like it hits you to the penny and then just reverses. Like that could happen. And there's been times I'm in trades. I'm like, I think today I was like, I might get wicked out here and just reverse it and whatever the case. And then sure enough, it didn't quite wick me out. It got pretty close to a wick. It wasn't like a true wick, and then just dropped and would have made over 2 hours on the trade on a Boeing plate I made today. But regardless, I mean, there's nothing you can do about that. Like your plan is in place, you have your stops in place. So if the market crashes, okay, you get stopped out, you're going to take a loss, but you're going to take a lot less of a loss than if you don't have any stops in place at all.
Fair enough. Right. So to recap, in preparation for the next potential market correction, let's call it that instead of a market crash.
What day is that coming? I got to write it down.
I wish I knew. Because to me, honestly, a market crash, if we crashed, I'm going to be buying cigarettes, I'm going to be buying alcohol, guns, ammo. I'm going to be loading up on all that stuff because that's going to be worth money. That's going to be worth value to
So your
trade.
definition of crash is like zombies come around. All right.
My definition of a crash, we're in a bigger problem than what's in our bank account at that point. That's my
Got it.
definition of a crash. So a market correction, what's the best steps for us to prepare for the next market correction? We've talked a bit about it. Make sure you're using stops. Have a plan in place. What are some of the other ones you want to add?
Have a plan for your specific account.
Okay.
Like understand the value of the money in the account, what it's intended for. If the money's there to generate income, have it generate income. If you're in a day trade, don't turn it into a swing trade. Like have a certain account. And if you're not at the point where you can have multiple accounts, you'll get there. Just have some kind of almost funnel system to be able to move money from the day trade accounts when you take wins, move some over to a swing trade, start building it. Again, time is your friend. Everybody wants to come in the market, get rich. I'm sure there's a ton of people right now in the market. If we checked everybody's portfolios that are just completely over leveraged, they would be freaking out in a market correction, market crash, zombies come to life, whatever the case. But understand like what you're in that move for. If you're taking an investment on Tesla, then have an investment. If you have a certain amount of shares, you could understand how to do protective puts, understand how to buy puts on the way down, things like that. Just have those plans in place for the certain account and know if something doesn't go right, if COVID point, what's the new disease that came out? I don't even know.
And the
Whatever.
Delta variant.
The Delta, yeah. Yeah. So if the Delta variant comes out again, or it's out now, and it starts really picking up and the markets and people start closing again, that could happen. Not saying it will, but what if it does or something similar to it happens? Anything could happen at any point. Have your plan in place. Like if the market crashes tonight, I know my day trade account's okay. My swing trade account, yeah, I'll probably take a couple hours of losses. My long term is going to go down, but I have a plan in place that I already know. Like I'm gonna just buy more. Like that's fine.
And you're
I'm
young.
okay with those companies.
You're young.
What's that?
You're young. The long-term investment. I mean, because I don't use stops on my long term. I don't at all. So
Yeah, no. Yeah.
I have other ways. So using collars and options to hedge my positions, but for the most part, I'm looking at taking profits and then reinvesting when I get dips. And I just continually do that. And that's because we're running out of time here. That's one other thing that I do is when I'm holding a lot of swings or I have swings, I am investing, or I shouldn't say investing, I'm trading, I'm swing trading, setting up swings in a lot of companies that I know and I like. So if for whatever reason I do get into that position where there's a big correction and what have you, I don't have a problem holding those companies either. Companies I don't know, that's a totally different issue. So I limit the number of companies that I have that are like that, where I have that kind of exposure. So
Yep.
That's about it. Dan, take us home.
Man, I love it. All right. So let me just check out the little thumb. No, we need some more thumbs up likes. Click the like button. Make sure you subscribe. Hit the notification bell. Get all the cool content. Do not forget, we've got the Real Life Trading Open House. Go to www.reallifetrading.com. Make sure you sign up for that. If you're not already a member of Real Life Trading, or if you are, tell your friends, tell your neighbors, if you like them only, put it on social media, Facebook, whatever the case is. We're here to enrich lives. We want to do that. We do it every single day with the outstanding members we have with Real Life Trading. We'd love for you to take a part with that as well. And next week, a very cool episode. We don't want you guys to miss it. Tracy, anything else?
Just reminder about the Hollywood Squares coming up August
Hollywood
1st.
Squares.
We want those contestants, so pay attention.
Yes, you can be a contestant. You can be a contestant. I see you through the screen. You can be a contestant. All you guys have the ability to be a contestant on the Real Life Trading Squares. Just go to reallifetrading.com, click on the Pivot Podcast landing page, and you'll see all the details, qualifying information, and cool stuff that is on that page. Otherwise, you guys are awesome. We'll see you next week for another episode of Pivot Podcast.
Cheers.